In America, two women can both earn $80,000 a year, but if one receives a W-2 and the other a 1099, their financial lives do not look the same. The number is identical, but the legal structure behind the money dictates how every dollar is taxed, saved, and spent. For the W-2 employee, compensation is a managed system. Before a paycheck reaches her bank account, the employer calculates federal withholding, deducts state taxes, and routes money into health insurance and retirement plans. For the independent contractor receiving a Form 1099 NEC, the responsibility shifts to the individual. She receives the full gross payment from her clients. There is no automated payroll department to withhold taxes up front. This makes gross income a deceptive metric for comparison. An $80,000 salary is a figure reached after the employer has already covered specific unseen liabilities. An $80,000 contractor revenue stream is raw capital that still requires the worker to calculate and subtract those same obligations. Because of these opposing systems, the same top-line number yields a different amount of cash remaining after her legal and structural liabilities are met. The W-2 cycle runs on predictability. Income arrives on set dates, accompanied by a pay stub. This document acts as a receipt, detailing exactly how many dollars were pre-routed to the IRS and benefit accounts. The 1099 cycle depends on variable timing, invoices, and client payment schedules. Every dollar arrives untouched, requiring the worker to track her own income and set aside the necessary reserves for future obligations. W-2 withholding functions as an ongoing automated prepayment of federal taxes. Contractors must proactively calculate their own tax liability and send estimated payments to the IRS 4 times a year to stay in compliance. For 2026, the IRS Form 1040-ES outlines this exact process. The documentation instructs individuals with self-employment income to manually figure their expected tax, minus any credits, to satisfy these quarterly deadlines. When a contractor receives a large invoice payment, the balance is not yet her own. A significant portion of that deposit is a dormant debt owed to the government, waiting to be paid. Beyond basic income tax, the largest structural divide between these two workers is the Federal Insurance Contributions Act, or FICA, which funds Social Security and Medicare. The total FICA tax rate is 15.3%. For a W-2 employee, the company pays half of this cost. The employee only sees the remaining 7.65% deducted from her paycheck. A 1099 worker has no employer to share the cost. She is responsible for the entire 15.3% as a self-employment tax on her net earnings, up to the 2026 Social Security cap of $184,500. This table compares an $80,000 gross income for both paths. Factoring in federal, state, and self-employment taxes, the W-2 worker faces a total tax burden of roughly $14,600. The independent contractor owes over $24,500. The legal title of independent contractor shifts an estimated $10,000 of tax liability directly onto the worker's personal balance sheet. Tax liability is only half the equation. W-2 employees typically receive a suite of subsidized benefits, including employer-sponsored health insurance, paid time off, and matching 401k contributions. They also gain access to tax-advantaged corporate accounts. For 2026, employees can route up to $3,400 into a healthcare flexible spending account and up to $7,500 into a dependent care FSA. The 1099 contractor operates without this safety net. Every day off is unpaid. Health, vision, and dental insurance are purchased at individual retail rates on the open marketplace, funded entirely from her own revenue. To manage these costs, she must build her own alternatives. By enrolling in a qualified high-deductible health plan, a self-employed individual in 2026 can contribute up to $4,400 to a personal health savings account to manage medical costs tax-free. A W-2 salary includes thousands of dollars in subsidized value that does not appear on the pay stub. To reach financial parity, a contractor must generate significantly more gross income just to purchase the same level of security. While the contractor path demands more capital for basic benefits, it also provides specific financial advantages. W-2 employees rely on the standard 401k plan their employer selects. Independent contractors can open a solo 401k. In 2026, this vehicle allows a self-employed individual to contribute up to $72,000 of her income into tax-advantaged retirement savings. Contractors also have the legal right to deduct ordinary and necessary business expenses. Costs like software subscriptions, professional equipment, and business mileage reduce their total net earnings, lowering the base number the IRS uses to calculate their taxes. The 1099 system trades automated corporate security for control over the financial structure. The worker has the leverage to manually lower her tax bill and set a higher savings rate, provided she has the cash flow to execute it. Financial clarity in the United States requires an understanding of your specific tax classification, rather than just the top-line salary you are offered. A common misstep for new contractors is treating a gross invoice payment like a net paycheck, failing to account for the 15.3% self-employment tax and insurance premiums that must be paid from that balance. The preferred classification depends on an individual's need for predictability versus her desire for direct control over expenses and retirement vehicles. Specific life circumstances change the math. For example, the 2026 increase of the dependent care FSA limit to $7,500 makes the W-2 environment significantly more advantageous for women managing childcare costs. When evaluating a transition from a W-2 role to a 1099 contract, the gross rate must be high enough to offset the loss of employer tax contributions, paid leave, and health subsidies. These two paths represent different legal frameworks for managing wealth. The W-2 is a managed system with predictable pay, automated withholding, and shared tax burdens. The 1099 is an autonomous system with variable income, deductible expenses, and independent benefit funding. Operating on the autonomous path requires rigorous tracking of receipts and invoices and consulting a CPA to ensure quarterly estimated taxes are accurate. For American women, Form W-2 and Form 1099 determine how income is protected, taxed, and grown. Navigating these two systems with precision ensures that more of that $80,000 stays in the woman's control.